Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well guys, caution was the trend setting word today. If you look at across the board, across broad markets, Asian markets and European markets, it seems like investors are just not willing to take a major bet ahead of the critical FOMC meeting tomorrow. So clearly I think Santo, at this point of time, everybody is trying to keep their cards close to their chest. If you look at the Nifty and Sensex, they're headed for the second straight day of losses. After 6 days of consecutive wins, we are now seeing second day of consecutive losses. And the volatility gauge, I think, is something that is very important at this point of time. The India VIX surged about 3% in trade again, on top of the 6% move that we saw yesterday, which is
very sharp for the last couple of days.
Which is basically telling you that market is preparing itself for a negative surprise from the FOMC. Just in case there could be a bad news, they want to be owning put options in the market so as to protect their downside.
Well, yes, and profit taking is not all bad for the market either. You've seen six days of gain, and so some bit of profit taking was likely. I think CJ here on the trend once again could be sideways for a while till we have some clarity. There is still a lot of skepticism on whether the economy is indeed in the best of its health.
Absolutely, absolutely.
So
I think Santo, also the fact that the previous rally, when it was in its total heat, people were expecting that we will cross that 200 DMA, and then once that 200 DMA is taken out, around 17,050 to 80, if I'm not wrong, then we could have another big rally towards 17,500. Clearly, that has not worked out to script.
Well, but at the same time, the bulls can always, point out that this time you didn't see the trend of, a higher low. In fact, the market did rise above 16,200, which it had failed to do on the previous
absolutely.
time.
And we have not gone below that so far. So, yeah, I mean, good, thank God for that.
So, it's still anybody's market at this point.
Absolutely.
And with that, let's dive into the set of stocks that are on our watch list this afternoon, starting with VRL Logistics. CJ, the stock has been one of the best performers for the year so far. More than 50% gain, and despite 22 being a COVID, a good part of it being a COVID hit year, you still saw the company turn out record profits. And besides that, the company is now investing further. It had opened about 91 branches last year, and a good part of it in Northeast, which allowed it to capture good market share there. It's planning to add another 1,600 odd trucks to its fleet this year, also open another 91 branch. And also, if you look at the overall the balance sheet picture, it's pretty sound out there, with a debt to equity ratio of 0.2x, which is quite healthy. But that's not the main story, CJ. The main story really is about the big consolidation happening in the less than truckload market, which is about 35% of the overall road transport. Here is where I think VRL Logistics has been steadily improving its market share and is likely, given that all the kind of investments it's been making, this trend could sustain. Clearly, the market seems to be sensing something, which is why it has really pushed up the stock close to 50% so far this year.
Yes, Santo, I mean, clearly, I think you can't really complain if you have seen 56%, gains in the stock this year when the entire market has been in doldrums. But I think my only concern, Santo, here would be that VRL Logistics is very closely tied to how the economy is doing, right? The first 6 months, of course, we have had a much better 6 months than last year's, first half, because apart from that, the third wave scare, which didn't materialize as badly as probably the second wave was. We have had, largely restriction-free economic activity in the first half of 2022. And I think that has clearly also reflected in the earnings. But going ahead, Santo, with the entire talk of a global recession, I am very sure that even our economy will not be escaping that. It will not be an island of growth, as a lot of people seem to believe. And I think that is where probably there could be possibility of some profit booking creeping in the second half of this year, in the coming 4 to 5 months, when you will start seeing investors being more jittery around the earnings season, and you could see the stock becoming more volatile. I think that would be my only concern. Maybe the best of the gains have already been had, and from here on, I think investors should be a little cautious on how they want to build their positions on VRL Logistics. Well, one stock where there was a lot of caution ahead of its earnings earlier today, but all of that caution was totally unjustified, and that was Asian Paints. What a blockbuster set of numbers, really telling everybody that you don't know me, as much as you think you know me, right? Everybody had been battering this stock. Oh, competition is going to come in. The valuations are not sustainable. And there, lo and behold, I mean, if you look at the numbers, volume growth, the best in 6 quarters that the company has seen. EBITDA or beating, CNBC poll, even money control poll. So clearly, estimate beating EBITDA performance as well. And overall, the margins also held pretty well in the June quarter. So clearly, beat all across. And I think Santo, if you look at, it's not like there is only one segment of the business that has done well. It's across the board. The 3 or 4 major segments that Asian Paints is in, they have seen good double-digit volume growth, healthy, demand traction. So clearly, the company is on a very strong footing, and according to some of the analysts, has probably gained market share in the June quarter, even though we are not yet sure because Berger Paints and other paint companies have not yet reported their earnings. So clearly, a lot going for it, and I think, people always doubt Asian Paints that how can you pay 80 times, 90 times, 1 year forward PE for a stock which is only growing this much and that much. But this is the reason why people pay. This is the reason why investors are willing to pay over the top premiums, because in a economic situation as bad as we are currently in from a global point of view, Santo, Asian Paints can deliver numbers like this.
Well, CJ, probably it's now my turn to say that you can't really argue against a stock like that, which has been performing consistently. Close to about 20% gains over the last 1 month alone.
Yeah,
probably market.
I think probably market was sensing this.
That sensing the strong set of quarterly numbers. CJ, again, everything going Asian Paints way at this point in time. It's yet to take out the peak it had made a few months back. But looking at the strong uptrend in the stock and the fact that investors are willing to pay premium valuations. So my main argument was that investors would be wary of paying premium valuations, but that's been proved wrong, even at these prices. But mind you, CJ, we have not seen competition kicking in yet. So that is still some way off. If probably the stock exceeds its previous top, then I would say that for sure I think the market is now clearly betting on Asian Paints. But I would just hold my horses a little, though everything is going for the stock at this point, and just wait maybe for a couple of quarters.
Santo, I have my faith that I think the company will easily be able to tackle the competition coming its way.
Okay, Sharda Cropchem, that's a stock which has taken quite a bit of a pounding, and mainly because a steep fall in net profit, and that's come as a big shocker to the market, which is betting on the stock. This Sharda Cropchem has been one of the fancied stocks, chemical names, over the last 1 year. Sentiment has dramatically changed. The company's management was there on CNBC TV 18 today, and they've said that this is kind of the volume growth is pretty much there, but what went against the company was that the currency fluctuation. That is where it has taken a big beating. But at the same time, the forex losses are notional, and the receivables actually have been valued at the exchange rate as on June 30th. And the company is planning to fund all its capex plans through internal accruals. It says that it expects growth in Europe to be quite sustainable. Europe is about 51% of the market, and it feels that the worst of currency fluctuations may be behind.
Santo, I'm a little surprised by that commentary of Europe probably sustaining good growth, because if you look at the the Q1 numbers, clearly the weakness has been driven by, of course, the cross-currency headwinds, and that is only thanks to the plunge that we have seen in the euro against the US dollar. So clearly that is what has weighed. But I think, the fact that 51% of its earnings or revenues actually are exposed to Europe, a place which is right now battling not only probably the worst recession it's going to see since the great financial crisis, but also severe heat waves, right? And during such period, I am not so sure how demand is going to sustain there going into the next 6 months for Sharda Cropchem. So I am a little suspect about the demand scenario coming from Europe, emerging from Europe. I think that is probably one risk that is going to remain. And also I think management was of the view that probably the euro has bottomed out for the time being. But we can't really say that for certain, because at this point of time, the monetary policy in Europe is going in one direction and the economy is going in totally other direction. So clearly, the hedging risk from euro could continue to weigh on the earnings performance going into the second as well as the third quarter for the company. And that is why I think this stock is something that probably is best avoided at this point of time. We're talking about, one sector, Santo. I'm sure you would be quite gleeful what is happening to this sector, and that is the new age technology space. I mean, Zomato, PV Fintech, Paytm, all down in the dumps, but one stock that was not, and that is Nykaa, Santo. And clearly, I think market is now segregating between the boys and the men in this space. Clearly, if you are new age tech, you are going to get beaten up. But if you are profitable new age tech, you will probably get some sort of ER or emergency services right after the beating. And I think Nykaa is clearly getting that. If you look at, I mean, it's probably the only new age tech company with a profit track record and a business model that also, makes it quite beneficial towards a monopoly sort of a space because of the inventory model that Nykaa has. A lot of analysts has been talking about this, that is why probably Nykaa, as and when it emerges itself, within the fashion space as well, which is trying to make a mark, it will be able to gain a lot of market share there. So clearly for me, I think Santo, market now prefers Nykaa as a preferred bet within that new age tech basket. And going ahead, I would not be surprised if you see a lot of institutional interest also coming back on the stock.
Well, CJ, this has been one of the pet arguments for a long time now. But when you say that, there are buyers are interested, I don't quite buy that. If you look at the stock has been listed since November, and if you see for for calendar 2022 so far, the stock is down almost 30% from its highs.
True. So that is why I said now you got a beating because you're a tech name, you're a new age tech name, but now you're also getting the ER services, right? Because you are a profit making. So I think after that beating, probably the correction valuation, maybe some, value investors are figuring out, and maybe there is the situation not that bad.
Well, the stock price is just not going anywhere. Besides, CJ, I've seen that you always keep pointing or harping on the fact that the company is profit making. Agreed, it's profit making, but what kind of valuations would you pay for those profits?
I mean, if you
would
can
you pay
30% Santo, I mean,
or would you value it at 1000 PE trailing? I think that
1000 PE trailing, of course, is, I mean, it's sort of a, I mean, how do I put it? The earnings momentum at this point of time, of course, is not as high as the price momentum, right? Because price will always move ahead of earnings, and
Very
that
true.
is why
I take the
optically it will always look like, oh, trailing earnings will look so expensive, right? But Santo, if you look at it, the future projection, future PEs are actually coming down as further away you go into the the financial year, and that is only because profit is going to catch up with the price performance, and I think that is how almost every growth stock is valued.
Which is true, CJ. But then we have to see those profits also. Given the rising competition in this space, it's not going to be
my
easy
friend. I can't show you the FY25 profits right now to convince you, and probably I will only be able to convince you when the FY25 numbers are in front of us or the FY26. So that said, I think that would be my only argument. I think the only way you can look at Nykaa is if you are probably seeing good signs every quarter or every 6 months, then you make staggered investment. I think that is the only approach you can do. You can't go like, I'll sell my house and put everything here because I might make maybe 10x or 1000x returns. I think the only way is to judge the company on a quarter by quarter or half year by half year basis and see whether it's working out on the conviction that you have.
Well, last stock on a watch list today is Symphony. CJ, I don't know if you have heard about this stock or it's read about its history. It's been one of the most amazing turnarounds of all time.
Yeah.
Okay, so in 2005, okay, you were getting the stock. It was a 10 rupee fade up at that point in time. You were getting the stock for about 5 rupees. Okay,
Wow.
5 rupees, and if you had been holding that share till 2018, you would have got 2000. You would have been able to cash out at that 2000 was again adjusted. So 2000 into 5, 10,000.
Are you telling me you should not have bought the Royal Enfield and put the money in?
No, these are
not bought the cooler maybe.
No, these are things you can never predict. The company had almost gone bankrupt, right? Listed in '94,
Absolutely.
it diversified into too many products. They went bankrupt. Had to be registered with the BIFR for SIG companies, but managed a strong comeback. The management decided that air coolers is the space it wants to be, and it's been a tremendous journey. But that said, CJ, I think it makes me wonder perhaps if the best of the company is behind at this point,
that's a big statement,
because for the last 7 years investors who have been holding on to the shares probably have not really seen any decent returns. 2000 was the peak, and now the stock is still about 50% down from that. The point we brought it up here is that the stock, the company announced its first quarter earnings, and while on a year-on-year basis, the comparison looks quite solid, but if you were to look at it on a quarter-on-quarter basis, the numbers are quite disappointing, and margins also under pressure. This despite the fact that typically the June quarter is one of the strong quarters for a company which is into air coolers.
Well, Santo, I think I take your argument about Symphony. Of course, the performance maybe over the past 5-6 years has not match the hype around the stock, probably because this is what happens in markets. When you build up a stock so much and you have all the gains earlier on, then the earnings has to catch up, and therefore you do not see stock performance that way. So I think that is what probably has happened with Symphony, where the bottom line has kept on growing, but the stock price is probably petered out. But talking about the first quarter, Santo, I think there are still good signs overall. You talk about volume growth. There has been decent amount of volume growth, but yes, of course, the higher raw material cost has punctured the earnings momentum for the company in the June quarter. But the only argument here is that probably the worst of the high inflation in raw materials is in the June quarter, Santo. I think probably going ahead from here, because of government intervention, because of what is happening in global commodity price, markets, maybe we will not see similar sort of high cost or high input cost continuing into the second, third, and the fourth quarter, and therefore, with festive demand, hopefully, sustaining well, just like last year, we could see a revival in the stock probably in the second half of this year.
Well, another interesting point of the stock, when I was just looking at the graph, the stock peaked in Jan of 2018, whereas the revenue grew by another 25% between, that year and
that too including COVID.
Including COVID, FY20. So it's very surprising whether, market actually decide to discount, future earnings that far ahead.
Exactly, and that can happen sometimes. Sometimes price momentum is too overblown, that earnings take too much time to catch up, and therefore if you're buying at the top, say somebody was bought at 2018 prices, for them the stock is a dud because it has not made money. But for others who have bought it probably in 2010, 2011, they have had spectacular returns.
Well, with that, a quick look at the market. Well, still under pressure, CJ.
Yeah, I mean,
Nifty
Santo
down 145, 146
absolutely.
points.
I mean, it's the broad market, Santo, today. I mean, I think the floor has fallen off the small cap and mid cap space. If you look at the Nifty small cap index, down about 1.4% at this point of time. The Nifty mid cap index down about 1.2%. So clearly a lot of pressure coming in the small cap and mid cap space, which, by the way, was actually outperforming the large cap space throughout of last week. So we are clearly seeing signs of profit booking in this market, Santo.
Well, with that, which are the key earnings that we need to keep an eye out for?
Well, Santo, of course, later in the evening, L&T will be out, so the market will clearly be reacting to that tomorrow morning. And with respect to L&T, of course, not only is it an infrastructure play, but usually L&T's guidance tells you where the economy is at, especially in terms of the impending or the much-awaited capex cycle. So it will be important to see what sort of commentary L&T has to give. But apart from that, of course, we have Tata Motors, Bajaj Finance, and Maruti Suzuki, two automobile names, and a key NBFC coming out with their June quarter numbers tomorrow. And of course, later in that evening, we will have the FOMC statement. The Fed's monetary policy outcome will be out. At this point of time, the market is betting it could be a 75 basis point, rate hike once again. But there are some people out there who also believe it could be 100 basis points. So it will be very important to see how that meeting pans out.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow at 9 a.m.